afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ed Carson here with a breakdown of the action in today's session, where we saw the market rally, pump the brakes a bit as the major indexes hit resistance, Ed.
Yeah, a bit of a heat check to say market tried to rally on Nvidia, despite Nvidia's warning, decided thinking better of that. But we're going to take a look at a few stocks that are doing some good action: KLA, SQM, and China EV giant BYD.
All right, we'll get to all that, but first, let's take a look at those major indexes. So we had the Nasdaq today finishing down about 0.1%, same for the S&P 500. The Dow finishing slightly in the green, up 0.1%. It looks like small caps were looking strong into the close, though, Ed. So we'll check that out. But first, the Nasdaq here, I mean, resistance at a trend line. So even though we did clear the June highs for a nice rally off lows, not all too surprising to see a little bit of resistance at this level.
Yeah, we've run up a lot. And the thing is, when you've fallen that much, there's a lot of places where you can hit resistance. A lot of reasons why people might just say, you know what, I've made a lot of money or made money back. I'm going to sell. So today, Nvidia had a pretty big revenue warning, and that was not a good sign. And we also had some other negative earnings out there. So not really a surprise to come back. It was surprising to see how strong the market was in the morning. I mean, it was really strong gains given the Nvidia news. And it was just like, wow, we're just going to keep going through this, are we? And then it's like, well, wait a second, maybe not. And so, the end is fine. The end is ultimately fine. It's like, given the news that we had out there, basically closing flat or slightly down is not a big deal. It's not great how we ran up and came down, but the ultimate close, we're sort of due. We're still above the 10-day line, for goodness sakes. It's hard to think too much of this.
It is, but with the resistance that we're running into on the S&P 500, right at those highs from early June, running into some overhead issues here. It could be a spot, not saying we're gonna, retest the lows or anything, but could this be, I guess that's what we don't know, is how significant this will be. But we do know at least that this is a little bit of a warning sign that might want to prompt active investors to adjust accordingly. I mean, at the open this morning, we always say, no one likes a Monday morning gap up, but just with the strength in biotechs and solar, those were two areas specifically to me that I was thinking, things are looking pretty good here. Is this, how much can we keep this up?
Yeah, that is a good point. And I think investors should be cautious about adding exposure right here. When you're at those sort of levels, it's like, well, wait a second, maybe just to see how things go. The Wednesday CPI is going to be important. It should show a decline in headline inflation. There should be maybe some worrisome signs underneath. That could be a test. And we could pull back. We could pull back to the 10-day line. We could pull back to the 21-day line, or we could have something much worse. But we don't know if today was that meaningful. I think it's like, well, wait a second, we paused here. This is a key area. It wouldn't be the worst thing if we paused for a while. A lot of stocks have run up a lot, so maybe this will turn out to be beneficial. But you sort of just have to wait and see how that develops.
Right, because maybe we will continue to see that resilience. And today was just a little heat check, as you said. We'll have to see how the week develops. And moving on, let's take a look at the Dow. Hitting resistance roughly around the same area as the S&P 500, but small caps passing that up, looking pretty strong today.
Yeah, I don't know why small caps were so strong. It was, how they held on, but nice action here, definitely above the June highs. Sort of now, it's not that far from the 200-day line, so that'll be interesting going forward if it can move toward that in the coming days or weeks.
And a quick check on the 10-year Treasury yield, dipping a little bit after coming up last week, a big reversal bar there on the weekly chart. So down a smidge, but after a huge move for much of this year, now we are in a bit of a downward trend still.
Yeah, this was one reason, I guess, you could argue, this is why stocks were rallying, because the bond yield was coming down, which has generally been good for that. I will say that the inversion keeps on getting worse between the 2-year and the 10-year. which is more and more of these recession signals, despite the strong jobs report. Yeah, we've had a long run up, and now we're in a downtrend within that uptrend, sort of. The CPI report is going to make this one move a lot, presumably.
So we will turn our attention to that, of course, and position accordingly. But in the meantime, let's take a look at some stocks. So here's KLAC in the Semiconductor Equipment Group, down about 2% today, slightly above average volume, but a strong move in the last couple of weeks here from early July, along with the broad market. And it would make sense here, Ed, to see some sort of handle form to present a new buying opportunity for potential investors.
Yeah, there's a bunch of these chip makers that sort of ran up past their 200-day line, sort of almost straight off the bottom. Most of them running up, and then running up out ahead of earnings, and so that made it difficult. And so if it could pull back here at this point, this is one reason why if the market went sideways for a while, this would be nice, because there's some areas you could do sort of sideways there, and it is over halfway above the cup. So if it paused here, it would be a legitimate handle at that point, providing a buying opportunity. So I think that that would be really good. This is one of the leaders in that group. It's always good, you want to see chips leading, and you want to attach yourself onto the leaders within that sector.
Well, one to keep an eye on there. And now let's also take a look at SQM, Sociedad Química y Minera, which is a lithium play, other chemicals and fertilizers as well. But this stock up 3.6% today, does have earnings in a little over a week. The move came today in lighter than average volume, hasn't quite cleared a trend line yet, but a number of lithium related stocks on the move today.
Yeah, so this is setting up it sort of has a handle, but that handle is just a little too low to be proper, but you could use that trend line or the late July highs as a buy point to get into this. Yeah, the earnings are something to watch out for. I think people are expecting good earnings, so because its rivals have done so well in terms of the results. ALB had really strong numbers last week, and they raised guidance a ton. Intraday, they had sort of an entry going on, but it pulled back quite a bit because the market did. But SQM, I think, is definitely looking, it's interesting. You have to watch out for earnings. Another way to play it, I know that you were talking about this sort of huddle after IBD Live, is LIT, which is something that owns a lot of ALB. It owns some SQM. It owns a bunch of Chinese battery makers. It owns BYD and Tesla. This one is coming up, but it did hit resistance of the 200-day line. But this is a way to play it without having that single stock risk that you would have. And you figure that if you believe in EVs or believe that EVs will have a chance, you would think that this would be something that would do well. But just because that thesis is there, you can see how this stock has come down. This ETF has come down a lot. So just because you have a nice story doesn't mean that it's guaranteed to have every chapter in it is going to be nice.
Exactly. Yeah. I don't know. There's different lines of thinking out there, obviously, but I feel like this group kind of reminds me of the solar stocks. The individual names can be maybe a little bit more volatile. So if you didn't want to have that single stock risk, and like you said, you believed in that thesis, this might be a way to play it. And since you mentioned BYD, Ed, let's take a look at the stock itself, BYDDF here. Speaking of fundamental stories, this one has a lot that is very compelling about it in terms of just the massive growth that it's experiencing right now.
Yeah, I mean, the growth, even though it's more than tripled sales in July, and that's with a huge number of growth drivers that are coming up that, it's a Tesla rival. It's really going to be competing against Tesla more and more, both in China and around the world. Vast international expansion. We'll see. There's a lot of opportunities, but there's a lot of risks. I mean, the logistics, individual markets might look at these cars and say, I don't like these cars. I mean, there's always that issue. So there's not just an upside, but this one's setting up. It's below the 50 line still. It's a rising 50-day line, so that's a positive. It needs another week to have a base that's sort of next to this deep base. It sort of came up. It came down. There is also the other risk of Buffett. Buffett is a long-term investor, and there were rumors that he might be selling. there's been no confirmation either way about whether he's staying or whether he's leaving. So I don't, but that's what triggered this. Then they pre-announced some really good earnings, which they haven't released yet. So that came back. But if it bounced above the late July highs, that would sort of be breaking above that area. You could probably treat that as an early entry in this stock. That would be something in there. A lot going on, but yeah, this is like anything else. It is a China stock, so there's always going to be some risks there. It doesn't seem like China's cracking down on the EV stocks, but you never know. And there's always a lot of other things that could happen in China too.
Yeah. And it seems like a lot of these stocks in this theme, so whether it's on the vehicle side or the battery side or the battery components, they might be trading, jockeying for leadership positions. So that I sound like I'm really like trying to sell this ETF. I'm really not. I mean, it could be doing a lot better, but I think it's just like, thinking about that in general. But you have to look at the components for sure and make sure that you know what you own if you did want to go the ETF route. For those in TAN, that's working right now doesn't mean it will continue working.
Yeah, I mean, definitely, that's a great point. Always look at the components of an ETF, because some people think, oh, I'm buying this. And it's like, well, you're not really.
Yeah.
And but that is a way to go. That's been a way to go necessarily in this market, because there haven't been that many leaders at any one time to buy. So ETFs, either sector ETFs like TAN or broad market ETFs, have been a good way to trade in this rally.
Yeah, biotechs too. Can't forget that. A couple of the
Absolutely.
biotech ETFs. So yeah, we're keeping tabs on those too. All right. Thanks so much for watching, everyone. We will be back with more tomorrow morning on IBD Live. So join us, investors.com/IBD Live, for all the details on that. And we'll see you right back here tomorrow after the close.